traders, Gary Wagner here. It is approximately 1:45 in Honolulu, making it 4:45 in New York City. First day of the week, Monday, the 13th day of February, and this is the daily report for gold and silver. Well off of the highs of the day. We'll talk about that in a little bit, but we have the precious metals markets trading slightly unchanged to a little bit higher. Currently, we have gold up about 70 cents. As you can see, current print 17.22, and silver trading up approximately 14 cents, 33.73, 33.83 bid-ask spread. Traders, as you know, my current belief or Elliott wave count in gold is that we are in a intermediate wave 1. That's this wave here, which is going to be part of or one of three of the impulse waves found within a major 5, which we just began. And that when we plot the intermediate 1, our subwave count right now is putting us in a minor 4. Now, typically on a marketplace itself, it is most likely that you'll get what's simply called a zigzag or what's known as an ABC correction. And when I say ABC correction, what I'm talking about is the subcount within this minor count here. So this would be an A, a B, and a C. If that's the case, we could have already had a flat. As you know from Friday's recording, I believe that it's quite possible we've already seen the low that it was 1703, 1704. I thought it was just below 1706. But traders, I am looking at another possibility in terms of a straight Elliott wave count, and that would be that this particular minor wave right here could in fact be moving towards what is simply called a pennant formation. Now, on a pennant formation, of course, what we're looking at is a market that is compressing. So we're getting a series on the low side of higher lows and then a series of lower highs. And that would give us our pennant formation. Now, on a pennant formation, typically what you're looking for is after a given count, you get a breakout to the predominant side of the trend. I would have to say in this case, the predominant side right now is up since we've had this extended rally. And typically, when you see this market react like that, you will get a sizable move in the market. And that would make sense if, in fact, our scenario that the market will consolidate here and break out to the upside actually comes to fruition. Now, obviously, before we get anywhere near that point, we have got this major resistance at 1750 that gold, simply put, has been unable to take out. One thing interesting, if you look at the trading activity of just last night, the high is listed at 1751. For some reason, I think it's a misprint because I saw it come in right when the market opened, and it seems more likely that the market didn't make that high. However, it's being announced by Kitco as a high, and it was also on the data vendors' data that we take in. So you could have had some sort of a large spike as an order was being filled or something of that nature. I will do some research into that. But as I said, before we get to this 1802, which is really my next target, we've got to be able to overcome this resistance right in here, which has pretty good historical precedence. As you can see, really what we're going to try to do, it will come out to be an inverted head and shoulders. But what we're looking at is as this market came and tested these lows here, 1520, and came back up, this is our first real test. And then, of course, it will go to test above 1800. So traders, will this minor 4 unfold as a pennant formation? That's something we'll have to see over the next couple of days and couple of weeks as we watch this market trade. This is a 480-minute chart, and as you can see, I have added what that pennant or flag formation might look like. And It's quite possible. It's something that we absolutely want to pay attention to. And traders, that brings us to silver. Silver is trading up 12 cents on the day, about 1/3% higher, outperforming gold. The one characteristic, though, that keeps standing out in this market is really that sideways trading activity and the consolidation within the market. This is a daily chart, standard candlestick format, and it's absolutely clear that we have a band of resistance and a band of support, and it's trading within that defined range. To illustrate that, I want to look at a intraday 60-minute chart, straight candlestick format. Go ahead and blow that up a little bit. And it is quite clear that when we look at this chart on a very, very quick intraday basis, there can be no doubt that we have really good support. Here it's the 38% retracement level right above $38 per ounce. As you can see, we've got a lot of areas where it tested after breaking above this. This is the first test right in here, and always forming a level of support right in this area before it head higher. Now, on the other side of the fence, as it heads higher, it's run into some really strong resistance, and you can see that here. However, what I am noticing is where you started getting a series of higher highs right in through here, that tended to peak right here because the last series that we've gotten seemed to be a series of lower highs. But when it trades up and down in this band, it can do that. So we want to watch this market closely because traders, we're in at $28. We've got tremendous profits in there. If we see any sign of slippage, we want to pull some profits or lighten the load. But it's trading sideways for the time being. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.